Bitcoin is knocking on the door of $65,000, and the reason may have less to do with crypto hype, and more to do with the Federal Reserve. Here's the story. US inflation is cooling. And when inflation cools, markets start to believe the Fed may not need to keep raising interest rates. That matters a lot, because higher rates usually put pressure on risk assets like stocks, tech, and yes, Bitcoin. Why? Because rates change the entire financial environment. When the Fed is hawkish, borrowing gets more expensive, liquidity tightens, and investors tend to move toward safer assets. But when inflation eases, the market begins to price in a softer Fed path, fewer hikes, maybe even rate cuts down the road. That's the kind of backdrop Bitcoin tends to like. And this isn't just a crypto story. It's a macro story. Lower inflation can reduce both nominal rates and real rates, which improves financial conditions across the board. In plain English, money feels a little easier, and investors are more willing to take risk. That's why Bitcoin is getting support now. It's not just about traders chasing momentum. It's about expectations shifting in the bond market, the dollar, and Fed futures. If investors continue to believe the Fed is closer to done hiking, Bitcoin could keep benefiting from the same liquidity-friendly forces lifting other risk assets. But there's an important caveat. This trade is all about follow-through. One softer inflation reading is helpful, but it won't matter much if the next jobs report is hot, or if the Fed pushes back hard in its next meeting. Markets need confirmation. So the next 90 days are critical. Inflation data, labor market data, and Fed communication will tell us whether this is just a short-term bounce, or the beginning of a broader trend that could keep Bitcoin supported. Bottom line, cooling inflation is weakening the case for more Fed tightening, and that's bullish for Bitcoin. Thank you for watching. Click the like and subscribe buttons to stay informed.